The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, what we're going to do today is start out with the German DAX. As you can see from this 60-minute chart, we completed a small ABCD pattern here over the past several days. Went right down to the exact spot where it should have stopped, which is very interesting. But we really need to do now is take a quick look at it on a little bit longer time frame, because we're looking at some things now in these markets that literally scare the bejeebies out of you. So, one second. We got a problem in River City. It will be fixed in just a second, but uh-oh. Wow, this has never happened before. Well, I can't post a weekly chart. I don't know what's happened. My little mouse seems to be sick, but we'll move on to the next one. Anyway, the weekly chart on the DAX doesn't look that bad. It's over a major ABCD pattern. Wow, I don't understand here. Let me try something. Nope, it won't work. Shut the front door and raise the rent. Not going to worry about it. Okay, let's move on to the next subject here. What we want to watch this morning, of course, is what's going on with some of these markets, and we're having a great deal of activity in some of these things. So it's important that we keep an eye on some of these things. Now, we've had a pretty good break in the market for the wow, I am lost. Folks, I have lost so much stuff in here this morning. I don't mean money. I'm doing okay on that. But the charts, I can't find the charts. So what happened to the charts? I have to look. Okay, let's try this one here. Here's what I was watching this morning. We have the CPI number come out, and look what gold does. Gold goes up and matches the high that we made 2 months ago. Beautiful 1.618 expansion. But look at silver on the right side there. Silver's making lower tops in a perfect 135 pattern. And so the reason is you watch this is that if you happen to be, long silver and it's not acting properly, you certainly want to tighten your stop up just as close as you can, because this means the market is not breaking out to the upside. That's just a short-term technical picture, but it's one of the tools that you want to use if you're, coming into reports, and that's why I think it's important to watch these as you come into these reports, because that gives you some really good spots to usually take a low-risk position, and that's the whole key to this, is to try to, keep positions at a relatively small amount. I wanted to post the chart here for the Treasury bonds this morning, because we've had a pretty good action here today. You'll notice that we were very, very close to the 786 retracement today at 156.02. We got to 155.23. We immediately broke a full handle from that point, whether that's going to be anything or not. But the notes are still lagging behind. I mean, they still look bearish to me. And I believe that this, what they think was a flight to quality over these past few weeks, is going to come out and bite them on the keister before it's all over, because I really believe that interest rates are going to be going higher. That's the way I look at it from the cheap seats, but that's neither here nor there. We had a couple of questions regarding the chart that I posted about the copper, and I wanted to bring that up to let you folks see it again. This is a long-term weekly chart. I'm going to do some more work on this for the newsletter over the weekend and take a look at it, because there's three major ratios. One from 2013 is your 61% retracement. From 2014, it's your 78% retracement. In 2011, it was your 38% retracement. So we need to watch copper. I mean, you talk about Dr. Copper, it has lagged the stock market by quite a bit, because remember, copper usually follows the stock market. Well, it's followed it pretty well, but not on a percent basis, that's for sure. That's probably due to quantitative easing, but that's neither here nor there. We'll do one thing at a time. And now the final question that we've had for the day, asked by several different people that listen to TFNN, and I wanted to bring this up here to let you take a look at it. They asked me what I think is going to happen to the S&P. Folks, I hope you know what swag means, sophisticated wild a guess. And that's basically what I'm looking at here. If you'll notice here, if we get below the 2400 level, I believe we're going to get down to 2100. You'll see the November low during the election. That's a 78% retracement. We could also make the 2200 level, which is the 61% retracement off that level, and it's also a 1.618 expansion from the move from May into August. So that's what I'm looking at. It could even make this by August the 21st, which is the solar eclipse and new moon. This is really wild times. One of the things that we mentioned at the beginning of the month, that August is going to be incredibly volatile, and it has so far not let anybody down. And I think it's just the beginning, folks. We're only 11 days into it. So, by the way, this is a very important day in the Pesavento and Luck household. We have a 4-year-old today. Little Mitchell is 4 years old, and believe me, he is one happy camper. And he really loves being 4. He thinks he's an adult now, so he may be. Hey, he's pretty smart. Okay, let's move on to the next one. We're going to take a quick look here at volatility one more time, and we'll look at this picture of the VIX index, and we'll bring it up here to take a look at it. As you can see, the trend line that we had from May through August, that we broke that yesterday. We broke that the day before yesterday, and then yesterday we broke the trend line that went back into 2016. The only one that's left is the trend line that goes way back into August of 2015. That comes in at around 2,400, and if we get above 2,400, 2,400, boy, shut the front door and raise the rent. If we get above 24 in the VIX index, that would signal it's most probably going to the 1.27 expansion up around 42, and I believe that's what Mr. Tom O'Brien, our leader, was talking about last night, that if we did get above that level, we'd most probably get into the low 40s, and that would be pretty good. See what's going on, with that. So just keep a close eye on these, because we live in interesting times, as they say. And we'll take a look at it, what we're watching. Someone's asked a question about adding to existing positions. I don't know what positions he's on the VIX. No, I would not. Folks, the one thing that I've learned in this business, and that is being greedy doesn't work too well, especially from this old cowboy's vantage point. I put a position on and I try to manage it the best way I can, and usually I put it on in thirds, and I'll take a third off, and then I'll take another third off and another third off. With the stocks and stuff, I've held it because it happened so fast that you really had no choice but to hold on. So I'm just holding to see what happens. I'm looking for a really good rally today. This would really be a relief for the market, that the E-mini held at that 2430 level. That would be very, very important. But the one thing that I really firmly believe on is I'll bring this up to you in just a minute after we take the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I wanted to let you know that we are going to have our good friend Shane Smolian from wolftrader.net, who on Wednesday morning issued a major sell signal in the stock market. Hats off to that, because that was the high, so good for him. Anyway, let's move on here and take a quick look at the crude oil market, folks, because we've had quite a bit of action yesterday after we hit that 50-20 level, which was a big ABCD pattern. All we've done now, folks, in the crude oil is come down and make an ABCD pattern going back to August 1st. Those of you that like ABCD patterns, you'll notice here that the D pattern was the low of the day today at 48.15, but the move down on August the 1st, which was $2 a barrel, was equaled with what we had yesterday, also in time and price. So this is a really strong support at this 4,800 level in the crude oil. Now, you know, if you're doing long-term trading, this probably doesn't affect you too much, but if you're watching $2,000 moves, this can be very important to watch these smaller patterns that you have forming over the last 8 to 10 days. That allows you to enter the trade, you know, without having to risk, you know, quite a bit, and that's the main thing. The second thing that happened yesterday, folks, that was really important was the fact that we had one heck of a bearish crop report in the grain markets, and the grains really broke badly. The only grain that has held up to a really great extent, in my opinion, has been the December new crop corn. It has really held the $3.70 per bushel level. You know, soybeans went below it. I mean, we tried to buy them on Monday, but of course the market took off without us. Then we had the crop report, and you know, nobody wants to go into a position in grains during a crop report because they can be very, very tricky, as you could see what happened yesterday. But what we're looking for now is to see how the corn looks on Monday morning, because if it still holds this 370 a bushel level, that's a 78% retracement of the whole move, and that's one of the things that would really like to see happen, because it's got a really good chance. Another one that's we've been watching, of course, has been the cattle market that Rich Anderson alerted us to last week of the potential weakness coming in the cattle. And as you can see from this chart on August cattle, that we have literally, after we made that 61% retracement up there around the 115 level, we literally have started moving down big time. We've already dropped 7.5 cents in 4 trading days. So that's a big move. We've broken below the 78% level of the April low. So we've still got quite a bit to go to the downside in cattle. What it looks like is there's a potential we could go down and test those April lows at the 104 level, but that remains to be seen. When you have these big moves down in cattle or stocks or anything else, that's a sign that there's a lot of selling coming into the market, folks. And so what you want to do at those points is just be as patient as you can and see if you can get an entry point that allows you to enter with a very, very small amount of risk. That's the whole key. It's not how much money you make, it's how much money you don't lose. And if you focus on the amount of money that you're losing, you're going to be far better off. You've got to reverse the thinking in trading than you do in just about anything else. Most people think about how much they're going to make when they enter something, but with trading, you should reverse it. Think about what you can control, and the only thing you can control is the risk-reward equation, and that's the thing that is certainly the most important thing to do. Someone asked a question about the crude oil. Folks, the question is, I don't know the long-term direction in crude oil. If you look at the chart, we've been making lower highs for quite some time. We've hit major Fibonacci numbers on each of the rallies, so the trend appears to be lower. That's the bottom line of what we're watching here. But that's the only thing I can mention about that. Is I'm just a technician. All I try to do is to see how the market reacts around these points, and sometimes you're right, sometimes you're wrong. But it's just a matter of picking the right spot and see if the market's going to give you the benefit of the doubt. That's the main thing that you want to be watching. So just keep in mind that's part of what we're looking at right here. We're having a pretty good rally this morning in stocks, which this is what we call a relief rally or a dead cat bounce, if you want to look at it that way. But those are the ones that can yield a lot of profit if they stop going at the right price. So watch these markets closely. We have a lot of things happening with volatility during the month of August. I've already mentioned that. I want to mention it again. I'll mention it every day, probably in August, because this is a big time. We haven't had this many astrological things happen in, I think Norm mentioned several years, as I recall, when we had Norm Winsky on the show recently, and he was letting us know, what that had happened. So there's just a lot of things happen, so you've got to be very, very careful. That's the $64 question of, what we're looking at right here. So far, we've had a 40-point rally in the NASDAQ this morning. It could go some more, of course, but you want to be watching it because this is a pretty good rally. But we've had such a big drop in this thing, just a small retracement here, doesn't give you much to. Hold on a second. I've got to. There we go. All right, we'll just watch this kind of closely and see what's going on with some of these markets, and we'll move on to the next one here. Regarding the Treasury bonds, folks, we had that ABCD pattern. I believe that's the. I don't know if it had anything to do with that report. That's what we're, what we're looking at this morning. But whether that had anything to do with that, I'm not sure. But it's just a calculated guess that what ABCD pattern is really pretty good. You know what I mean? So that's what we're watching. So keep a close eye on it because it's going to be an important one no matter what. Okay, now we'll move on to the next one in here, and we'll see what's going on, and we should be okay. Good. We're having a little bit of a bounce. That's what we want to see. Folks, when I did my trip to Europe this past spring during the month of May, I met several traders that have become good friends through the years. And one of them one was already very wealthy, but the other one became wealthy in trading. He's still a relatively young man. And he shared with me his technique, which I had I had looked at this technique many, many years ago, but it never really dawned on me. But over these past several months, I've been following it, and I'm trying to figure out the best way that we can share it with our readers here, because, boy, he has made a lot of money trading this particular pattern. And it's relatively simple. It takes you got to have a lot of courage, and you have to have a belief in the system that you're dealing with. But if you're looking at something that really wants to put you in the right direction, that's the one that you want to really keep an eye on, because it's pretty much spot on to what you're looking at. So watch it closely, because when we get to it, we'll take a look at what's happening with it, and we'll see if we can make it work for some of us, and maybe do a webinar. And that's what my game plan is, I hope, and we'll see if that's going to work, and we'll work from that level. Okay, now let's move on to the gold market. We did get up to that level of 12.98. We're only up $1 right now. Silver's actually down on the day, which is rather surprising, consider it didn't break out, but we'll watch these and see what happens. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Shane Smolian, wolftrader.net on the line. Shane, are you there?
I'm here, Larry. Can you hear me?
Hey, perfect. I've got your first chart up. And by the way, congratulations on that great call on Wednesday. A hat tip to you on that one, my friend. You've had some great ones, but boy, that was a monster. Go ahead and tell us what you've got today, because I know everybody's interested.
Sure. Did you get the PDF that I sent?
Yes, we got the first chart up already.
Okay. The first chart, is this the one with I can't see anything on the screen. Is this the one with the A, B, C, D?
Yes. It's a black chart with the, what do you call it on it?
The Fed juice.
Markings. Yes, there you go, Fed juice. Yeah, that's it.
I don't see it yet on the TV.
Well, let me do this. I will put it up again just to be super safe, and we'll get it up here. And there you go. Okay, I think it's there now. I think we're okay. No one else can see it either. Just one second here. It should be coming up now, but boy, I hope it does. If it doesn't, I'm going to be. Of course, I'm not the. Well, they say I have to. That's the only way I know how to do it. So this is the way I do it every time. I've never done it any way differently. So I hope I haven't. I hope it haven't messed up here. But they're saying they can't see it, and that's the only time that I do it this way. Hold on, they're trying to convert. There we go. We're in business now. We have it. Go ahead. We're ready to go.
I still don't see it yet on the.
Well, you know how to talk from it, because you know
sure,
what it is. It's with the Fed juice, and it's got.
I try
to see it.
This is a chart that I posted last time, but we couldn't see it last time, so I'm just gonna. There it is. Okay,
good.
So on this chart, I've labeled this chart A, B, C, D, A through H, basically, and underneath it, you can see the Fed juice below it, and if you could scroll up just a little bit, it's coming out of the screen a bit. Maybe if you could maximize that chart. So the whole point of this is just to show everybody, and I had meant to post this about a month ago, that the Fed juice is still extremely high, and we're at astronomical levels, and the market correlates pretty much to the T with this thing. So what I always look at first is this Fed juice, and it's so important, because the astrology really takes a back seat to this. And even in the recent turn that we had down on Wednesday at the close, the Fed juice had turned down first, the signal that I have. And so I will never even make I will never make a trade call, like say, oh, this is a sell, until that Fed juice is agreeing with the astrology. It just so happened on that day that the Fed juice was down, and the astrology, we had 2 sell signals, and the next day we had 3 on the 10th. So everything was kind of clustering around this point. And that's why it worked out. Plus, we have these fears on the North Korea situation. So when we have fears going on, what you need to understand is that the astrology tends to become a lot more real, and it tends to become a lot more accurate when there's emotion involved. So the fact that we had all of these things coming together, it made an unusually, nice sell-off yesterday in the markets. But going back on this chart here, this chart goes just back through the last couple of years, and essentially, pretty much on every turn, the market has followed what the Fed has been doing. Now, last month, Yellen was talking about cutting the balance sheet, and it was very hard for me to gauge what she was saying and what she was doing. So I took a more bearish stance before, because she said she was going to start cutting the balance sheet up to 20%. And then, so I said, well, the market could start to go down then, because if there's no Fed there, of course, this is the only thing holding the market up. But after listening to her testimony, it became very clear that she's not serious about this at all. And she said that she's only going to be cutting 20% of the repurchases that she's doing. Now, what are the repurchases? So essentially what happens, a lot of these securities are expiring, and she repurchases them to keep the balance sheet to look like it's going flat, like it's not really increasing. But in reality, she's purchasing almost $500 billion a year. So just try to imagine that. So it's kind of like a phantom graph. It looks like the balance sheet's not going up, but she really is purchasing a lot. She's still purchasing $500 billion. And if you looked at that and you just kept adding all the purchases, we'd probably be up around $7 trillion or $8 trillion right now. So what she's planning on doing is cutting only 20% of those repurchases. So that's a very small amount. Then she's kind of slipped a comment in to one of the congressmen. She said, well, we can't really get it much below $2 trillion because of the amount of money that's in circulation. And so in essence, when she said that, I kind of, the lights went off in my head and said, well, this is all just a kind of it's kind of a stunt. She's just kind of just saying it to act hawkish, but in reality, behind the scenes, what's going on here is very stimulative still. And so you talk about she's going to cut only 20% of the repurchases, and the balance sheet has to stay well above this $2 trillion, which, is kind of a strange thing to me because we're only talking about not even 10 years here, 8 years. So she basically just put it in their minds that, yeah, I'm going to cut a little bit, but I'm really going to keep this balance sheet high. So this puts the bullish scenario back into play. And so I had to come back this month and say, look, I listened to what she said. She's not serious. This market's going right back up. So long term, until Yellen is out or this Fed juice stops, this is still a very bullish and supportive picture.
Okay.
So if we could go to the next chart.
You betcha. Just 1 second, and it'll only take me just a second to get here, and we will be here. This is the one with La La Land.
Yes.
I like that. Hold on.
So
there we go.
The comment that I made was that, this market is essentially, because the Fed juice is doing what it's doing on this next chart. The La La Land chart. I don't see it yet.
Yeah, I'll post it.
Okay. This is a very striking chart. So what you can see here, I know it's hard to see down below, but in essence, what has happened is the Fed tried in 2013, 2014 to do this pullback when Bernanke was trying to do this taper. And what happened was, the minute they got below a certain level in the juice, the market started faltering, and you can see right where it says SPY right there, right to the left of that. That was that first dip, and then it started really having problems. And so I think at that point they said, well, damn, the market's not as strong as we think. So they really had to increase the stimulus. And if you look how high it is, it's at an all-time highs right now. And so that's the zone that I call the La La Land zone. And as long as the stimulus is there, this market's not going to go down. I mean, we may have these days like we had, this yesterday, or the dislocations or the fears, but in essence, all things equal, and that means no, nuclear war, something crazy like that, or a terrorist attack. But all things equal, this is still in a very bullish profile, and I cannot see this market going down as long as the Fed is pushing these numbers up the way that they are. I just can't see it. There's just not going to happen. You might get these couple of days where you get these dislocations, but overall, I'm looking at this data, and this is all that I follow. I'm not even going to follow what Janet Yellen says or what the Fed says anymore. I'm just going to follow what I see on these charts here, because what I'm seeing here is all-time highs, all-time stimulus, and there's no way that market's going to go down while this is happening, unless we have a major, major event. And what I saw yesterday, that's not a major event. That's just a one-day event of fear on a North Korea thing. But as long as we're in this La La Land zone up into here, it's not coming down.
Okay, we're going to take a break to pay some bills, and we'll be right back with Shane Smolian of WolfTrader.net.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to be speaking with Shane Smolian about this chart we're looking at now, the La La Land chart. So fire away, Shane.
Yeah, so in essence, I just, want to emphasize the point that it's just get it out of your head that we're going to have a decline here, people. It's just not going to happen. Like, as long as the Fed is doing this, it's just not going to happen. We might have these couple of days where, it comes, falters, but I will throw the dark horse in here. Yes, there's tension with North Korea. Yes, something could happen. Do I think it will happen? I don't think so. I think this is a lot of just saber rattling. So I'll put that caveat there. Of course, anything could happen. But I'm just saying, as it is now, it's going to keep going up. And it doesn't matter what kind of overbought technicals you see, what kind of wave counts you see. You've got an external source here fueling this push higher. And so you have to understand that. And so it's very noble of people to say, I'm just going to trade what price says. I'm not going to make excuses, blah, blah, blah. Well, I'm showing you real data here that's showing you what's happening behind the scenes. This is really what's happening. This is the reality of the situation. So that's all I want to say on that. If we could go to the next chart.
Sure. This is the graph on the closing bell. Just 1 second.
Yeah, the closing bell. So this is just to show people what we post on Twitter. So every day on Twitter, I post charts on the S&P, on the dollar, on gold, on oil, and on the TLT every day. And then from that, we can get I give us signals every day. So like right here, you'll see this every day. So this is an example of Thursday. You'll see the closing bell. So I'll have the symbols here, and then I'll have the dates, and then I show what the Fed juice is doing on each symbol. So like right now on the S&P on the top, you'll see the Fed juice is down and the Astro is down. So when they both agree, then we get what's called a swing trade signal, and that's short, and that's what happened. And the next possible turning date is today at the close on the 12th. That's a lunar bottom, a lunar cycle bottom, which is in the newsletter. And so that would be when I would expect this market to have its first chance at a bottom. So today is the first chance that this thing could be trying to make a bottom. On the other symbols there, you can see that there's really no agreement there on any of these. It's one's up, one's down, so there's no signal. So we're only looking to take these highest probability trades, and then the TLT's been long for a few days here, and that next turning point is on the 14th down.
It's very interesting. We have a question from one of our listeners, and that is on a long-term basis, he's talking the next 30 days, your view of the market is still friendly. Is that correct?
Absolutely.
Okay,
Absolutely.
good.
Yeah.
You want to go to the next one, which is the transit chart?
Sure. Yeah, this one's interesting. So, the astrology It really, really tends to work when we have two situations. When you have the Fed's not involved, which they are involved right now, or there's emotion. And so, you know, we can get down to taking trades to the exact minute of the day. I mean, if it's a light market and there's no Fed involved, you know, we can put the midheaven over, like I put this midheaven over Manhattan on this chart. And this shows right here on the 9th of August, there was a peak. Right, so from a purely astrological perspective, that was the top, you know, and that was the top of the market. And why did it work so well this time? Well, a couple of things. You had some emotion involved with the North Korea, and then you also had the Fed juice going into a sell. So when those two things come together, it makes a beautiful setup for a sell signal, and that's what we had. And it picked it up beautifully. I put this right over the Manhattan. I put this right over the markets, right over the New York Stock Exchange. So we're getting all of these, it's basically coming in all the way from the ascendant to the midheaven, everything converges, and we get what's called a real live dynamic, transit update. And this is a combination of hundreds of transits. We can look at one or two transits, and sometimes that's important, like the eclipses. Eclipses are important, or, you know, certain events, but I really want to see what, you know, all of the combinations are doing together in a synergistic fashion, and that told us that there was the top on the 9th of August. I think it's a short-term top, but, you know, it lined up nicely this time because the Fed juice was behaving with what we wanted to do.
And they still do the reporting of Fed juice every day. Is that correct? Around
Yeah,
10:30,
they send out all types of data throughout the day, and we collect many different types of data from the Fed. Sometimes it takes us all the way till the close to get all the data. Sometimes I'll know earlier in the day. But based on their activity and based on what they're doing on multiple fronts, I can correlate that with the market, and then I can get a general direction of what's going to happen.
Okay, then the next one we're going to take a look at, of course, is the red arrows with the Fed juice, the green arrows with lunar cycles, and blue arrows with the solar cycles. You want to cover this?
Sure.
Okay. I've got it. It should be up now. Let's try it again, and then we'll.
There it is. So
Okay,
this is a
good.
chart. This is like the tail of the tape, if you will. These are all the signals that come in. This is all from the newsletter, by the way. So the newsletter is once a month. So you don't get a daily update with the newsletter. This is it. The newsletter you get once a month, and I give like once a week. I'll give a midterm update. But I color the different arrows in different colors for a reason, so you can tell what cycle is which. Now on the 9th, over on the right-hand side, those first two arrows, you had the 9th, you had the Fed juice going into a sell, and then you also had the transits, which we just saw, peaking. So because those two peaked together, that made a short swing signal, right? And it made a beautiful one because the next day we knew we had these three sell signals. By the way, these were there ahead of time. I posted these at the beginning of the month. This is nothing that I posted after the fact. This was all there before this move occurred. And because the Fed juice was friendly with that, then I could say, well, we have a short swing trade. If you just use the astrology alone, you're going to get burned. You're going to get burned bad because the bias is up. And if you even, for us to get this down day yesterday, it was a very unusual coalescence of events. It was very rare for all of these things to come together to get that, but it did happen, and it did get a pretty good ding to the market. I mean, it came down pretty good, but we saw this coming in terms of the down cycles. It was all there ahead of time. It's just that once that Fed juice gives us the green light, then we could say, yeah, it's okay to short this. I'm very, very hesitant about shorting this S&P because it's very difficult to short. You may only get 1 or 2 days down, and then it just turns right back and goes right back up. And we've seen, and the thing that's just mind-blowing about this, since the Fed has come in, you see these incredible declines. We've seen them back in 2011 and 2013, and it looks like there's so much technical damage. You're like, how can it's just too much from a technician standpoint. You're like, this is it. This has to be it. It has to go down, and then it heals itself up, it recovers, and it goes back up. Why? Because we have this external engine coming in, pushing the market higher, and I'm able to track that. And so I'm just focusing on the data that I see. And from what I see, I can just tell you that from the data that I see, it's bull city still, even though we have this minor pullback. Now, the important thing is, go ahead.
No, I think it's just tremendous how you caught that 2-day move. I mean, I was watching it Wednesday morning when you posted it, and I said, wow, I'm embarrassed myself. That's another feather in your cap because you've done really well with short-term trading plus the long-term trading. You've done a great job, Shane. You should be very proud of yourself.
Thank you, Larry. It's a tough to balance the two because part of me wants to be very bearish on this because I know that this market, if there was no Fed, it would be going straight down to hell in a handbasket. I know that, and I got to divorce myself from that part of me that's like that to understand the reality of what's happening, which is we have this Fed pushing this market higher, and for us to even get a couple of down days like this, you have to have a lot of things come together just to even get that to happen.
Okay, we're going to take a little break, and we'll be right back and finish up with Shane Smolian of wolftrader.net. Thanks, Shane. We'll be right back with you, okay?
Thanks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, Shane, I wanted to bring this last chart up, which is about your Fed juice buy. And then what I'd like to do is, if you're finished with this, if you'll tell the folks some of the services that you have and how they can reach you, why don't we do that?
Sure. You can go to my website, www.wolftrader.net, and I have a newsletter which comes out once a month, and you get maybe once a week I'll do an update. Or you can do the Twitter service, which is a full-time service, and you get daily charts, you get daily signals, everything, and it's instant. As the numbers coming from the Fed, I post the numbers every day. Just real quick on that SPY, guys. Potential bottoms real quick, the 12th of August, which is today, or you got to come a day ahead of time, which is today, or the 16th. And then also watch the Fed. If they get reappointed, if Janet Yellen gets reappointed, then there could be some problems in the market. So that could be happening in November or so. So I just wanted to kind of throw that in.
Okay.
Go ahead.
No, let's continue on. You've got the mic.
So this is just one of the other charts that this is the dollar, this is the UUP, and recently it had been in a long downtrend. I mean, this has been one of the most persistent downtrends that we've seen, but now finally it's in a buy. But you can see there's no agreement on the signals there. On the 9th there's a sell, and there's not a buy until the 15th. So this has really no signal right now until that Fed juice lines up with that. So if the dollar is still in a buy on the 15th, which is on Tuesday, then we would have a nice long signal on the dollar. But again, these two have to line up, and so that's that can change daily.
Mm-hmm. And these markets do react very, very quickly. We have a question about the influence of the solar eclipse coming on the 21st. Anything you'd like to alert us on that?
Yeah, maybe for another show we can talk about that. I was looking at that eclipse. It's actually happening at 28 degrees of Leo. With the moon, and it's making a relatively friendly angle with Uranus and Cupido, so relatively friendly. I have to see how it affects the markets. We could talk about that on another show.
Hey, maybe we could come on the 21st.
Sure, that'd be great.
Thanks, folks. Shane Smolian, wolftrader.net. Thank you, my friends. Thanks, folks. We'll see you tomorrow, Monday morning.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.